What's up, guys? Alvaro here, and welcome to the Bilingual Stock Market channel again. Let's go ahead and talk about some stocks and about the beautiful green day that we had today in the markets. And today we had an unbelievable green day, 100% across the board. Even the 11 sectors of the markets, all of them closed today's trading session in the green. So Russell 2000 goes, when it comes to the indices, Russell 2000 goes up today 1.69%, NASDAQ goes up 1.33%, Dow Jones goes up 1.23%, and the S&P 500 went up 1.23%. Crude oil goes up 8.76%, and it is trading once again above $100. Gold goes up 1.47%. Silver goes up 3.04%, and the 10-year Treasury yield TNX also went up 0.18%. The only thing that went down today, guys, was the VIX. We had a very solid green day across the board, despite the fact that the volume that we saw today wasn't very high. That implies that we are not seeing quite yet a big institutional participation. But regardless of that, we had a very solid day, very solid green day across the board. Today, we also had jobless claims coming out at 214,000 new claims versus 220,000 estimate, and down 15,000 new claims from the prior week, which shows that the Federal Reserve is right when they state, or when Jerome Powell says, because he said that yesterday, that we have a very tight labor market that is going to allow the Federal Reserve to move forward when it comes to hiking interest rates. Keep in mind, guys, tomorrow, very important day, a day that only happens 4 times a year. Tomorrow we have Quadruple witching. That implies that tomorrow we are going to have a massive expirations of options, of indices, future markets, and stocks. So usually when we have a quadruple witching day in the markets, we usually see very volatile trading sessions. So be ready for wild swings up and down, because on these days the market makers let's just put it that way, the holders of put options and call options to cut their losses before the trading session ends. So they make the markets go up and down in very wild swings in order to put pressure over the holders of puts and calls that expire during those days, in order to force them to cut the loss before the trading session ends. So that implies that tomorrow, very likely, we are going to be riding a roller coaster. Keep also in mind, this is a news that came out a few minutes ago. Tomorrow, President Biden and Xi Jinping are going to speak over the phone. That is going to be a market mover. I don't know the time in which these two presidents are going to talk, obviously, about Ukraine. But I guess that once the call ends, both governments are going to make a statement, some sort of a statement. And if those statements state that the conversation didn't unfold in a friendly manner, then we can expect to see some sort of downwards pressure over the markets, especially when it comes to Chinese stocks. If we take a look at the sectors of the markets, green day across the board. The 11 sectors closed today's trading session in the green. Energy was the best performing sector. It goes up 3.44%. This implies that the markets are still a bit nervous when it comes to the situation in Ukraine. Obviously, the Federal Reserve, the Federal Open Market Committee, and the beginning of a new cycle of interest rate hikes has been the main attention throughout this week. But the situation in Ukraine is still there. And the fact that oil went up today, because today we had an everything rally, is a sign that the markets are still concerned about the situation in Ukraine. The two most important sectors of the markets, technology goes up today 0.71%, and financials goes up today 1.25%. If we take a look at the advances and declines distribution, we can confirm that we had a very broad rally today, with 5,348 stocks going up and 2,250 stocks going down. Now, and before going over the indices, I want to show you 3 day trades that I took in a successful way during today's trading session. Coinbase, this was a call option that I purchased this morning, earlier on today, the $170 call that expires on September 16. I paid $3,470 and I sold out of this call option and I was paid $3,670. I ended up making over here $200. Then I also took a day trade on Apple with a call option. Today was a day trading day for me. So, and I closed all of the trades that I started today, guys, because I know that tomorrow is going to be a roller coaster. So I preferred to play it safe. So at noon, I purchased the $155 call that expires on May 20th. And I paid $1,030 this May 20th. Yeah, correct. Of this year. I paid $1,030 and I exited this position being paid $1,140. I ended up making over here $110. And I also took a day trade on Facebook. And in the case of Facebook, I purchased 50 shares. Let me show you this trade quickly. In the case of Facebook, I purchased 50 shares at $203.14, paying $10,156, and I closed this trade being paid $10,258. I made over here $102. So long story short, I ended up closing today's trading session with a profit of $412. S&P 500 goes up today 1.23%, and it closed today's trading session at 4,411 points. So the bulls did the job that they needed to do today to the letter, guys. They were able to close today's trading session above 4,400. 4,400 is a previous area of resistance in which the S&P 500 failed on several occasions in late February and also in early March. So, very good job for the bulls. However, guys, the next important task for the bulls of the S&P is going to be taking on the 200-day moving average at 4,470 points. Can the bulls keep on going up tomorrow on a quadruple witching trading session and take on the 200-day moving average as they did today on a melt-up operation with low volume? I don't think that is going to be the case. And as I just explained to you guys in the introduction of this video, since tomorrow we have quadruple witching, the market makers are going to force both indices, the S&P and the Nasdaq 100, to have wild swings up and down in order to inflict the greater amount of pain over the holders of put options and call options, and therefore being able to force them to cut their losses before the trading session ends, in order to force the holders of puts and calls that expire tomorrow to cut the loss before the closing bell. So I don't think, I could be mistaken. I was mistaken today. I honestly didn't believe that the bulls were going to be able to close to take on 4,400, but I don't really see another melt-up, low volume melt-up operation taking place tomorrow and letting the bulls take on the 200-day moving average. In terms of the main line of defense for the bulls tomorrow, that is going to be 4,330 points. A previous area of support back from early October. And in the case of the bears, if they happen to have a good day tomorrow, which I hope for that not to be the case, they need to, the most important task for the bears is going to be reconquering the 50 SMA on the 4-hour chart at 4,280 points. The RSI of the S&P is at 66 points. Nothing crazy, it is a bit elevated, but you guys know that we have seen the S&P trading on good volume and momentum, or maybe not good volume, but good momentum, let's say on bullish sentiment, with its RSI being at 87 points. So tomorrow is going to be a very interesting trading session, and I think that this trading session should unfold somewhere between 4,470 points and 4,300. Now let's go ahead and take a look at the Nasdaq 100. And in the case of the NDX, also low volume today. the NDX goes up today 1.16%. And remember, guys, usually the low or a low volume in any trading session is a good sign for the bulls. Usually when we see a very, let's say, important spike in volume, in those trading sessions, we are very likely to see downside. But according to my opinion, the fact that we went up, that we have been going up a lot during the last 3 trading sessions on low volume, that implies that we are not seeing an important institutional participation, which is going to be critical in order to go back to, let's say, higher levels. I am not even going to say all-time high, in order to go higher for both indices, and the NDX and the S&P 500. So, as I was saying, the NDX goes up today 1.16%, and it closed today's trading session at 14,118 points. So, a good sign for the bulls, a hopeful sign for the bulls, is the fact that they were able to reconquer the 50 SMA on the 4-hour chart at 13,700 points. So, the next important gap that the bulls need to fill is going to be up to 14,400 points. We are talking about a former area of support back from early October. Can the bulls keep on going up on low volume? Can we see tomorrow another low volume melt up operation in the middle of a quadruple? We'd see not a chance, guys. I don't think that is going to be the case. So for the bulls, I'm thinking about the downside. The most important line of defense tomorrow is going to be 13,900 points, a previous area of support back from January 28th. And if we take a look at the RSI of the NDX, we are in a similar situation relative to the S&P 500, 64 points. It is a bit elevated, nothing crazy. But tomorrow we are going to see a very volatile trading session, most likely in the NDX. And I think that this trading session should unfold somewhere between 14,400 points and 13,900 points. And now let's go ahead and take a look at Fedex, which is reporting earnings today. Let's see what is going on over here. So Fedex isn't doing much, right? After hours, Fedex goes up today during regular trading hours 0.91%, and it closed today's trading session at $227.98. I'm going to pull up here the 1-day, 1-minute chart, and Fedex seems to be down after hours, right? It is trading at $224. So yeah, Fedex is down 2% after hours, nothing crazy. But what stocks go up nowadays after having posted earnings, guys? So adjusted EPS came in at $4.59, missing the estimate of $4.64. Sales came in at $23.60 billion, beating the estimate of $23.44 billion. And when it comes to guidance, very important. So FedEx sees full year 2022 adjusted EPS between $20.50 up to $21.50 versus $20.61 estimate. So they missed on guidance when it comes to full year 2022, when it comes to EPS in this case. And they missed on EPS for Q3, or for the quarter, for the previous quarter, and they beat on sales. So it was some sort of mixed earnings report. Do I have anything here? Operating income, okay, FedEx Omicron variant caused disruptions to networks and diminished customer demand in January and into February. So I am going to take a deeper look at this earnings report, guys. I am very curious when it comes to commercial guidance. I am very curious when it comes to what the upper management of FedEx has to say when it comes to inflation, supply chains issues, and so forth. But so far, it looks like a decent report. So, watch out for FedEx, guys. $217 is an area of interest. And why? Well, because $217 is a bit above the 50 SMA on the 4-hour chart, and $217 is also a previous area of support back from early October. So FedEx is trading after hours at $223. If I happen to see tomorrow the stock of this company retracing a bit, I'm paying a visit down to this area, guys, $217, $218, and finding a good support over there, I am very likely to start a trade, because I think that if support happens to be found near $218, and if FedEx happens to bounce back up, The stock of this company can fill the next gap up to $228. This is a previous area of support back from early December. So from $218 ish up to $228, we are looking at a 5% profit. And the next stock of this video is going to be GameStop, which is also posting earnings today. Let's see what. Ooh, my goodness. Take a look at GameStop. So it is down a lot after hours. GameStop goes up today during regular trading hours 0.97%, and it closed today's trading session at $87.70. And let me pull up here the 1 day, 1 minute chart. No, GameStop is not down a lot. I mean, it is down 10%, guys. This is a good chunk, obviously, right? It went up today 1%, and it is down after hours 10%. So what happens over here? So EPS came in at, this is a loss, obviously. GameStop is no longer a profitable company. So negative EPS came in at $1.94, down from $1.19 year over year. So they actually posted a profit, guys, on Q1, or let's say Q4 of 2020, and now they are posting a loss. This is very negative. Sales came in at $2.25 billion, beating the estimate of $2.22 billion. So let me see if I have any guidance over here, because yeah, this is very disappointing. I don't have the competitive when it comes to adjusted EPS, but they are losing money again, guys. And obviously that's no good. Okay, GameStop says it intends to launch NFT marketplace by the end of Q2, or the second quarter of full year 2022. So they are losing money again, guys. And obviously that's no good by any stretch of the imagination. So what could be happening here in the case of GameStop? What could be the next support? And I'm thinking, guys, that if GameStop keeps on dropping, the next foreseeable support that I can see over here on the 3-year chart is going to be at around $60, guys. I mean, this would be a $20 push to the downside for GameStop. So this chart doesn't look any good. If we pull up the 4-hour chart, this chart is absolutely broken. The stock of this company is an absolute no touch, a technical downtrend below all the moving averages. So I wouldn't touch GameStop unless the stock of this company can burst above $95. 50 SMA on the 4-hour chart, a very negative earnings report for GameStop. And now let's go ahead and take a look at the third stock of this video, Target Corporation, which goes up today 2.34%, and it closed today's trading session at $220.63. Watch out for $217, guys. $217 in the case of Target is a previous area of support back from mid-January and also back from mid-December. We are also talking about a former area of resistance back from early February. And as of now, we are clearly seeing over here on the 4-hour chart a golden cross. This is a bullish sign. You guys can see how this 50 SMA just crossed above the 180 SMA. So this is a bullish sign. This might be signaling that we are about to see more upside for Target. So any process of consolidation slightly above $218 in the case of Target is a buy, in my opinion, guys, unless the support of $217 happens to be broken to the downside. So picking up some shares of Target at $219, $220, and riding them up to the 100-day moving average, which would be the next target for the bulls. This would be the next gap that needs to be filled up to $230. We are talking about a profit of almost 5%. And also keep also in mind that this 100-day moving average coincides with a previous area of resistance back from mid-January and also with a previous area of support back from mid-October. So watch out for Target. $218, $217 happens to be a buy over here. And the last stock of this video is going to be a Square. And oh boy, let's talk about a horrible chart, an ugly looking chart. But Square seems to be starting to reverse this horrible downtrend that you guys can see over here on the 4-hour chart. So Square goes up today 10.26%, and it closed today's trading session at $127.96. And something that caught my eye over here, guys, is the fact that this downtrending channel, this clear downtrending channel, in which Square started to trade in since early October of last year, was recently broken to the upside, guys. Take a look at how, when the bulls of Square were able to take on the 180 SMA at $110, they were also able to get out from this downtrending channel. So Square is starting to look very compelling. Let's just put it that way. However, the RSI of the stock of this company is very elevated. You guys can see how the RSI of Square is at 75 points. So I am not going to touch Square at these levels with the RSI being so overheated. However, I'm thinking, guys, that if Square happens to retrace a bit for its RSI in order to be able to take a rest, watch out for $114. $114 is a previous area of resistance back from early March, and also a previous area of resistance back from mid-February. So in this case, we have a previous area of resistance that was broken to the upside and that now is supposed to act as a new support. So any visit of Square down to $114, and if I happen to confirm that that area is providing a good support, then from $114 up to the next important gap that the bulls of Square will have to fill eventually, up to $138. We are talking about a former area of support back from early January. We are talking about a 20% profit. So watch out for Square, guys. I think that any retracement down to $114, and if the stock of this company happens to find a good support over there, that's a nice spot in order to start a trade with the stock of this company that, mind you, guys, as of now, Square is trading. And when it comes to start any long-term position or something like that, Square is trading as of now 56% of the highs. This is a very, let's say, generous discount from a long-term perspective. And with Square, I am going to wrap up this video. Thank you very much for your attention, and thank you very much for hanging out with me once again. Remember and keep in mind, guys, that here on the Bilingual Stock Market channel, we are posting stock market update videos Mondays, Tuesdays, and Thursdays, 3 or 4 hours after the market closes. So if you want to get all of the notifications of all of our videos in a timely manner, you have to be subscribed to this YouTube channel, but you also need to activate the notification bell right up there. Follow us on Instagram as well, guys, at Bilingual Stock Market. And remember that this is the Bilingual Stock Market channel, the YouTube channel in which we talk about the markets, but we do things differently because we talk about the markets in 2 different languages, in English and Spanish, so you can pick your preferred language. But most importantly, this is the YouTube channel in which we know that the wonderful world of Wall Street is not for geniuses, it is for entrepreneurs, just like you guys and myself. My name is Alvaro, and I will see you guys on Monday once again, 3 or 4 hours after the market closes. Peace out.